All right, traders, tomorrow's going to be the last trading day of the week. With that being said, I'm going to prepare you to trade the best setups at the best prices heading into tomorrow. I'm going to be going over the best key levels to be trading at. This is going to show you if this support level reacts as support and it's forming a floor. This is where the SPY is going to be on track to go to next. If this level is reacting as a resistance level, it's forming a roof. This is where SPY is going to be on track to go to next. I'm going to show you how to scalp like a pro, where you can get in, get out on short-term expirations, staying at the money in terms of strike price, and make a quick 20, 30, 40% return very quickly based off of just one key entry at resistance with puts, selling at the next price target automatically at support, not hoping for it to break down. And then in terms of support, buying at the key support level and then selling at the next resistance level, not hoping for a breakout, right? So in terms of my style of trading, I'm not a breakout or bailout trader. I'm buying at key support, selling into the rips, but I'm mainly focused on put options because it's what I'm doing best, and we are in a bear market. And in terms of puts, I focus on key resistance levels, and then I sell at support, not hoping for it to crack, right? So I'm going to show you how to confirm when a key level is bearish, when to buy puts, and where to sell at the target without hoping that that support level is going to crack for a further breakdown when it can rip back up to your initial entry and go higher, squeezing you out. And then I will do the same thing for calls. Make sure you not only smash that like button, but subscribe to this channel. Let's get straight into the lesson. It's going to be a good one. So make sure you stay to the end of this video because I'm going to be showing you how to scalp like a master towards the end. Right now, I'm going to give you the key levels and discussing, if this key level reacts to support, this is where it's going to go to next. If this level reacts as a resistance, this is where it's going to drop to next. Towards the end, I'm going to share with you some technical price action confirmation talk on strategies and how to use these key levels properly when trading real time in the markets. So in terms of the SPY, this is what I want you to understand in terms of like how we're looking on the daily. There's been, tens of millions of dollars distributed in put options, swing trading towards, end of October and a lot towards November 18th. This is an overreaction from 348 all the way to 375 resistance. It's been going down ever since, putting in lower lows and really trying to fill the gap. There's a gap to fill below on the SPY right here at this 357.63 level. As you know, I was bearish for the SPY today. It's down nearly 1%. I'm going to walk you through towards the end those scalping opportunities that you could have utilized in yesterday's video on how to determine when it was bearish or bullish at those key levels. But we have some very important updates. So this is what I want you to understand about the SPY. Right now, we are selling off during after hours, and the SPY is actually having a gap breakdown here during extended hours trading. So I want you to listen to this because it's going to be very important. This is support. Your support is at $363.97. We'll round it to 364. This is your support with nice upside potential, right? Now, the SPY has been trying to fill this gap. There's a gap to fill below at 357.63. For this to go super bearish at this support level initially and really start to get hammered and fill the gap, what the bears would need right now at this given moment, they would need this support level to react as a resistance level. So they need it to go under 364, which it currently is, and then at some point it's going to bounce. And when it bounces, it needs to top at 364, or even better for the bears, it needs to form lower highs below 364. If that can happen, based off of the technical patterns that I'm seeing, you can see this is nearly 364 as well. We will be on track. We will be on track to have a flash crash to 360. Right around that 360, and it's really going to start to fill the gap. If it can crack 360 and turn that into resistance, there's a gap to fill at 357.63. We will likely see a small bounce towards 360 before filling the gap. I could see that occurring, but basically the SPY, if it cracks below 364 and reacts as a resistance, you can visually see it is held up on thin air. There is no support. It is held up on thin air. So if it cracks this support level and turns it into resistance, forms lower highs, it is going to get crushed and start to fill this gap below. Now, I genuinely believe in terms of the micro price action, if this were to just flash crash through 364, I think it would be a gift and a great scalping opportunity to be buying call options in between the zone of the gap fill level at 357.63 to slightly below 357.63, which would be right here at the low of this after hours support at 356.50. I personally think the SPY will be bouncing at 356.50 to 357.63 if we can get a strong overreaction crash into tomorrow, right? It wasn't too long ago where SPY had a gap to fill at $366.82. It filled the gap. It had a nice reversal, 2 days in a row off of that gap close reversals, multiple reversals at this gap fill level. This is now a lower level. It's going to be micro oversold and due for a bounce at 357.63. So that is the best price to be scalping call options at $356.50 to $357.63. If you see those levels reacting as a support level, it's breaking out, it's looking bullish. Once it looks bullish, wait for it to have a small drop back to the support level. Buy the calls into the red candles after the bullish reaction. Do not do it the other way. Get the best entry at the best price. Wait for the confirmation. When it's confirmed bullish, buy into a pullback. That's how you got to buy calls into the red candles. And then inverse, in terms of the puts, buy into, the green candles. When it looks bearish, forms the double top, wait for it to rip back, looks bearish, forms the single top, wait for it to rip back up, right? I'll be discussing this towards the end of this video. But that's what I want you to be aware of in terms of the SPY. It has been bouncing off of gap close reversals, and it's been consistently forming gap close reversals like I addressed in yesterday's video. There's a gap to fill right here. It fills the gap, it sells off, fills this gap below right here. It fills the gap, has a reversal, pumps back up. And then there was a gap to fill right here. Fills the gap, has a reversal, right? It's been consistently having gap close reversals, and we do have a gap that's waiting to fill below at 357.63. So for those of you who are bullish and looking for the best key level to be buying off of, use the bullish confirmations at those levels. Now, let's talk bear talk. So in terms of bear talks, you could see right here, it is starting to drop. We haven't seen much of a bounce yet. So basically what I want you to understand is let's talk upside potential. If you see 364 react as a support level, we will break out. And how high will it go to? The next level it'll go to is the previous closing price. We are on track to gap down. If we do gap down and open up lower tomorrow, it's going to, if 364 breaks above, you see it reacting as support, it's going to go to 365.41. That's where it's going to go. It's going to go to 365.41 to 366.82. That 1 point, basically that 1 point zone will be the next resistance level that it spikes to. Now, what I can say is, if previous closing price reacts as a resistance, you can try puts. But what would be a little bit more attractive in puts, in my opinion, would be towards this 366.80 level, right around 366.8. Look at this, man. You have this is the gap fill zone. It reacts to support, it pumps. It reacts to support, it pumps. It finally reacted as a resistance level with the 30-minute candle, 30-minute candle. See how this support, this floor is turning into a roof into the close, and then it sells off. It finally confirmed that gap to be bearish, which is so bearish. That means that we are in the process of filling the next gap. Look at this. This is no joke here, guys. Look at this. This gap right here, this is your support with big upside. This is your support with big upside. Reacts to support, it pumps. Reacts to support, it pumps. When it reacts as a resistance level, look at this. 366.62 resistance. Massive sell-off. And there's a gap to fill below. Right before the close, see how this is bullish, right? Top, a floor, a top wick. Look at this. Bullish bottom wick, not top wick, bottom wick, right? Forming higher support, bullish. It pumps. Now look at this. Bearish top wick. This is a roof. This is a floor. It just turned that floor with big upside potential into a roof. Hence the sell-off in after hours, along with all these other stocks like Meta and Snap that got destroyed during earnings. And if you look right here, big downside potential is ahead with a gap to fill below. When the support, floor reacts as a resistance level, and that floor has big upside potential, it is going to have big downside potential, right? And this confirms it as well. Big downside potential, resistance level with a gap to fill below. So the SPY is in that process of filling that gap. And basically, If 364 reacts as a resistance level tomorrow, it's going to be a hard sell-off. But if 364 reacts as a support, the next battle zone that the SPY is going to be fluctuating in is going to be the high of this ceiling, which will be at 366 right here, 366.62 to 365.41. So here's what we know. We know the floor is now confirmed resistance. We know SPY is selling off. We know it's currently below 364. If that reacts as a resistance, it's a hard sell-off, right? So if you see it pumping above 364, what you need to look for is, in terms of the best scalping opportunity, is you need to look for that previous support at 366.62 to the previous closing price gap to fill above at 365.41 to react as a resistance level. If that reacts as a resistance, buy the put options and it should crack below 364. But set your price target towards that 364 zone. Do not hold and hope. When it hits support, lock in those gains and wait for the next trade. If the trend is overall bearish, wait for it to pump back up to the previous support and then buy puts once it reacts bearish at the previous support when it turns into a resistance level on top of that spike into the green candle after you confirm it's bearish. That's what you're going to want to do. And when the trend flips, you get stopped out and then you just call it for the day. Keep milking the trend. But don't keep milking it to such a lower and lower level. When the trend is bearish and you see overreactions to the upside, buy some puts at the previous support level. When you see the bearish confirmations, wait for it to rip back up a little bit, buy puts on the double top. Simple stuff. And then when it stops working, the trend is shifting. So you have to stop. And you don't want to fully milk it all the way down to next support level, next support level, right? So that's what I want to bring awareness to the SPY. 364 is make or break. Bears need to crack a turn to resistance. Once they can do that, we'll be on track to fill the gap at 357.63. Once we hit those levels, we should see an overreaction bounce. Look for something like this on the 30-minute. Some strong bottom roofs, right? I mean, some strong bottom floors. And then look to scalp calls towards that 356.50 to 357.50 zone. And then in terms of puts, if this is breaking above 364 tomorrow into the pre-market, what you're going to do is you're going to want to determine, okay, is it forming a roof at that previous support? Your previous support is going to be at 365.50, the previous closing price to 366.80 gap close level. This is a very bearish confirmation. It's showing strong signs that the trend has flipped. And congratulations for those of you who are bearish when it was time to be bearish at the key resistance level in this overall bear market, right? Just know we will likely bounce. We will likely see some sort of bounce to 364. So remember, you're just determining if you're not, in terms of scalping, you're getting in, you're getting out. Best thing you could really do is don't buy puts at support. You want it to bounce at 364 if you're scalping, and you want it to rip back up to 365.50 to 366.80. You see it forming resistance. It's looking bearish, top wicks. Buy the fucking puts. Now, all I've been speaking of is really the downside potential. I have said, though, best price to buy calls is the support zone with bullish confirmation. Now, let's talk upside potential. So basically, for the trend to kind of flip bullish, what would truly need to happen is we would need to see a break above this like 367.50. It needs to break above this 367.50, turn it into support. That's what it would truly have to do to flip micro bullish. If it can't do that, it's going downhill. If it goes above 360.70.50, the next level it's going to go to is 370. If it goes above that, the next level it's going to go to is 372. Really couldn't imagine this going any higher than 370 tomorrow, right? Now, in terms of daily chart talk as well, so let's just discuss some of the daily here and some things that I'm kind of seeing. It's looking bearish. It looks like it wants to fill the gap at 357. So we just got to see how this reacts, though. Now, what I am seeing, I mean, it could be, this could be something like this, where it's just kind of chopping, looking bearish, just kind of chopping, look bearish. It has a gap down, it goes lower, and then it bottoms at this 357 gap fill level. There's a gap to fill here at 357. The SPY filled the gap, it filled the gap. It did go lower, but overall it had a reversal. So we will likely see some sort of bullish attempt. The first time will be the overall best time to do this. Some bullish attempt, bullish bounce at this 357.63. I mean, if you look right here, it bottomed at this 357. Very nice pump. Bottomed at 357. Very nice pump overall, right? So that's what I want to be aware of. In terms of me to swing trade, it looks like it's on track to really fill the gap as I was kind of expecting it to do for the micro. So I'm waiting to kind of see how it reacts at 350, 760, but I don't want to swing trade a put at support, right? So I'll see how it reacts from there, and I'll give a further update on my swing trade based off of how things are looking though. We're looking overall micro bearish. So yeah, now I'm going to talk some strategy talk, right? So I'm just going to show you how you can use these key levels to your advantage, right? So basically, in terms of ways to confirm if a key level is bearish, what I will do is I will study the history of the chart, kind of what I've been pointing out, visual things with candlesticks, and I will look to see how it reacts. So let me show you some reactions. In terms of extended hours, you can see the SPY was breaking above previous closing price. It had a breakout right here. It turns the previous closing price into a floor, which is bullish, and then it pumps, right? Further into the open, it was trying to flip, forming lower highs, turning it into a roof, And you can see right here in the open, we had it turned the previous closing price into a resistance level. It had a small pullback, which is bearish. So when it does that, you wait for it to rip back up to the previous closing price and you just buy a put. Even if the candle's green, you just buy a put because it already turned into a resistance level and it already had a small drop. So when it rips back up, you buy the put into the green candle. You buy the put at the top of this. When it looks green and bullish, that's what you're supposed to do. You're not supposed to say, okay, it's forming resistance, it's dropping, let me buy put to the bottom here and then get squeezed at the top. Do not scalp like that. I'm telling you, use the confirmations that I'm giving you. It's confirmed bearish. It's turning into previous closing price. It drops. It's confirmed bearish. It's turning it into previous closing price resistance. It drops. When you see it reacting at a roof at the previous closing price, resistance, top wicks, bearish candles, and it drops a little bit, do not buy the puts into the drop into the red candles. Wait for it to bounce back up and then buy the puts right here, the second time, the double top, and then scalp, right? And you should not have expectations of, okay, I'm scalping puts at resistance. It's confirmed bearish. I'm going to get in at the double top and get in at that green candle to get the best entry. But your expectations should not be, where's my target? Well, if it tops at the previous closing price, 368.50, based off of what the chart is saying, we're typically scalping for like a 1-point drop. A 1-point drop on SPY, if you're doing it at resistance and you're doing short-term expirations, can yield you a nice 20-30% return. If you're doing that towards power hour with same-day, 0-day expirations, it could yield you a lot more, 50%, 100%. It could yield you a lot more with the theta decay and all that stuff with a lot cheaper contracts. But we're not aiming too big. We're aiming for like a point, like 1 point, 2 point. If it's at major resistance, we could try to aim a little bit more. But we're getting in, we're getting out. That's what we're doing. So it worked. The confirmations worked, and that's how you can determine if it's bearish. You can see the trend reversal candlestick right here is bearish with the double top. That's all bearish. Now, how can you determine when it's bullish and when the trend flips and when not to be bearish, right? And just because we're not bearish doesn't mean that we're going to be switching sides and buying calls, but you should be cutting losses if you're in puts, but you shouldn't be in puts, period, if it's confirmed bullish. This is how you can tell if it's confirmed bullish. So remember, this is bearish reaction. It breaks below previous closing price, rips back up, forms a roof, bearish top wicks, it drops. Trend reversal candlestick, it drops. We're not aiming big. 1-point drop in our favor with the closest expirations, we're making like 20-30% return on contracts. You can put in like 5% of your account, 10% of your account, make a nice return on your portfolio. And you can do this like, once, twice, 3 times a day, depending on how many reactions we get. Now, this is when you need to flip bullish. And just because it flips bullish doesn't mean you buy calls, because again, we're identifying certain key levels, certain trends on the chart. But in terms of scalping, this is a bullish reaction. Okay, it's bottoming at support. You could see right here visually in the pre-market, right? You have a lot of support right here at 360, 730 with upside potential to 370.50, right? So if I'm scalping puts at resistance, I'm taking profits right here at support. As soon as it forms these, bullish trend reversal candlesticks, bottom wicks, strong bottom wick, I'm taking support. And I'm not even like waiting to see how it reacts most times. I'm just getting out, because something like this can happen where it just rips up instantly and then you get back all your profits. So, there's a reason why I go with closest expirations, because I scalp for like small moves. Like some people say a dollar move is small in the SPY, but that small move can make you 20-30%. And I really don't care how it reacts to support. It can react bullish or fucking bearish at support. I don't want to be buying puts at support. I'd much rather just lock in the profit and wait to see how it reacts. So let's say you played puts, you took your profits, you did the right thing, you didn't even see how it reacts, right? Okay, what's it doing now? Well, it's bottoming at pre-market support and it just broke above the previous closing price. So if it breaks above the previous closing price, that doesn't mean that it's bullish. What would mean it's bullish is if it bottoms at the previous closing price. So right here, it has a breakout. It could be a fake out, right? So we don't know if it's bullish yet. When it pulls back, if it's forming a bottom floor, if it's turning that roof into a support level, right? So this is your roof. This is bearish, top wicks. Well, your roof right now is reacting as a floor. It's reacting as higher support, bottom wick, breakout. Super fucking bullish. You should not be in puts. You should not be interested in puts when this happens. You should not be holding puts when this happens. Previous closing prices are make or break levels with big one-sided directions. Sometimes it chops in the channel a little bit, but overall, these are great scalping opportunities at the best prices. The previous closing price will always remain truly one of the best levels to be scalping at. So if you see it break out, pull back, react to support, pump, that is super fucking bullish. And that doesn't mean that you scalp calls, right? It's more advanced than this. But as you can see, it had a bullish run. Now, let's say I'm going to show you how to determine when to get back in on puts. So I'm not going to be going over resistance levels and stuff like that. You can see right here, the trend started to flip when it formed lower highs. It turned previous support right here into resistance. It turned previous support right here into resistance. It turned strong support right here, bottom wick into resistance, right? So the trend starts to change when it no longer goes higher. When it's turning previous support levels into resistance levels, when it's forming lower highs, cracking through those support levels, turning the new resistance level right here, which was previous support, into the new lower high, right? That's when the trend starts to change. We call that the back side of the move. So if SPY's on the back side of the move and it goes back down to the previous closing price and reacts as a resistance level, then you're going to want to scalp puts into the back side of the move. So I'm going to show you again how you could scalp some puts, right? This is support, it cracks. New lower highs, resistance, bearish backside of the move. This is your previous support. It cracks. New lower highs, previous support, resistance, bearish move. It just went under the previous closing price. It's consistently turning previous support into resistance. Scalp the puts into the next green candle. Scalp the puts into this. Scalp the puts into this. Scalp the puts into this. It drops below previous closing price, goes lower. Previous support right here. Scalp puts into the green candle. It's on a bearish overall trend. Keep on doing that, but don't keep milking it at lower and lower levels and just kind of take profits towards the next level. If you want, you can leave on a tiny bit, right? But just like take profits into the next support level. You can do this like 2 to 3 times a day and absolutely bank, right? So we knew that the SPY was flipping bearish because it was turning previous support levels into resistance. The trend was shifting to bearish. It kept on going down. It was failing to break out. And right here, it goes below the previous closing price, forms the lower highs, turns previous support into resistance, drops back down and goes lower. Are we buying the puts into this drop? No. When it rips back up right here, we are buying the fucking puts. It's been on a downtrend. It flipped bearish. It just had a very nice sell-off off the previous closing price. When it rips back up here, buy the puts. Look, it's a roof. It's a top wick. It's a bearish doji. Does this look like a floor to you? No. Buy the puts into the green candles. Your entry will be 10 times better than the person buying puts at the 368.50 level than the person buying at the 367.80 level, especially on a same day expiration. That's like a 20% difference, right? So you got to think about this. If you want these put options, you got to be waiting for the backside, waiting for confirmation of bearish, and then buy into the retest on the green candle. It's already confirmed bearish, man. People just don't get how this game works. I've had some people argue with me on this, and they're just absolutely wrong. They say, okay, I'm going to wait till it confirms bearish. It looks bearish right here. And then they buy puts into the pullback. And then they get squeezed and their entry sucks. Their risk to reward sucks. Their entry's not good. They're getting stopped out where I'm buying. And where I'm buying the puts, I'm making a much bigger return. And the way I view it as, okay, if this is a confirmation of the SPY being bearish, why would you buy the puts at a lower price into the pullback as it's dropping when you can just wait for it to bounce back up? It's already confirmed bearish, so why not just wait a couple minutes for it to rip back up and then buy the puts into your bearish confirmation at a much better level, right? If you did it that way, you wouldn't be getting stopped out where I'd be entering. My risk could be up here. Your risk is right here at my entry. That's the fucking problem, man. I could argue with these people all the day. I'm like, okay, it's confirmed bearish. Why are you buying puts into the downtrend? Wait for it to rip back up a couple minutes later. Buy the puts there. You really think the trend's going to shift that fast? And even if the trend shifts, my stop loss is higher than yours. My entry is better than yours. My risk to return ratio is better than yours. I'm doing what's best for me. You're buying puts into a support level after it just had a strong micro drop. I'm speaking for like micro scalping, where I'm holding these for a couple minutes up to 20 minutes. And it's so much more advanced this. I can only share with you so much in one single lesson, right? But that's what I want to bring awareness to, man. This lesson should have helped you a lot. I showed you how to determine, and again, this goes for my key levels that I've given you, but the previous closing prices are my favorite. And use these at resistance levels, right? Use these at strong resistance levels. So tomorrow you can try using these at like the 365.50 to 366.80 level, right? Use these at strong resistance levels. Use these at previous closing prices. Don't use what I'm showing you at support. It's not going to be the most attractive thing to use this at 364 initially, but give it some time. If 364 reacts bearish, then you could try it there. Just know the best way to use this and the best way to trade these is at resistance, right? Support was at 366.82. We just crashed to 364. Your new support's at 364. 366.82 is no longer fucking support. So use it at the previous support, not at the actual support 364, right? But you know if it reacts bearish and you know what to expect, right? But you can see right here, see how it's already bouncing off of that 364 level. You see what I'm saying, right? Do not play games with the SPY. Initially, it's likely to bounce first off of 364, but what matters is how it truly reacts. I mean, this is truly make or fucking break. I mean, just look at this. 364, big downside potential. But if it bottoms and reacts to the support level, like they tend to do initially, right? If the SPY is a massive sell-off initially, typically it will have a bounce at the level initially back to the previous support. And then when previous support reacts as a resistance, then you could buy the puts there. But again, if you see 364 reacts as a resistance and looks bearish, you could try it. Just know it's tough and that support level and it's got big upside potential. So you cannot be risking a lot. I'm risking like 50 cents, not on my contracts, like a 50 cent to 75 to $1 move against me, right? Scalping in very, very quickly. Best way to do this is out with the resistance levels. Some updates would be Tesla. I want to give an update on Tesla. So Tesla filled the gap and it's been bottoming at that gap fill level. Let me disable this for you to show you clearly. There was a gap fill at $204.99. It bottomed at the gap. It rocketed back up to 216. Now it's selling back off towards the gap. In terms of some pattern and trend recognition that I want to bring awareness to with the Tesla stock here, let me go back to extended hours just to visually show you something. So it's at 206.20. Now, in terms of the daily chart, it's a little interesting. We have this like trend reversal candlestick at the gap fill level with a gap to fill above. So it's trying to have a reversal to fill the gap above. Based off of history on how this reacts as it's downtrending at a support level, it's kind of interesting. You know, you can see right here, it has a micro overreaction to the downside, similar candlestick, but this one's a little bit more bullish, and then it pumps. Just to show you some other reactions though, it has a downtrend micro overreaction to the downside, forms pretty much the same candlestick, and then it starts to pump. Right here, it forms that similar candlestick. This one's a little bit more bearish at support, and then it just gets absolutely crushed. So in terms of Tesla, below 205, we'll be on track to drop to 190, 187. There's gaps to fill below on Tesla at 187 to 190. I personally think the first time it tests those levels, we will likely see a strong bounce. So remember, when it initially hits those key levels, we likely see reversals. So we should see some sort of micro reversal at 190 to 187. Strong support, big upside, gap to fill, gap to fill, gap to fill. There's a gap to fill right here at 187. It fills the gap. It has a nice reversal, right? That's what I'm thinking is going to personally happen. Likely due for some sort of micro bullish reversal at that 187, 190. 205 is make or break. And then we have a gap to fill above at 322. If that reacts as a resistance, you're going to want to scalp puts. Those are my key levels on Tesla. In terms of Netflix is getting fairly interesting. It had its first red day, and you know, we got support right here. It's reacting as a resistance, which is bearish, and there's a gap to fill below. Netflix is looking pretty bearish, right? It's floating. It's just not doing much. There's a gap to fill below. You got the bearish candlestick confirmation. It looks pretty bearish. So for Netflix, what I can say is this, 368.16 would be the best price to scalp puts on this. If you see it react bearish, remember, it's more than just key levels. It has to react the way we want it to react, right? Market doesn't care if we're bullish or bearish at a specific level. It has to react based off the confirmations I shared you with the previous closing price. Simple candlesticks. Is it forming top wicks of roof, or is it forming bottom wicks of floor, right? So just use the confirmations, man. Don't be so jumpy to enter a trade. Give it a little bit of time, see how it reacts. And then when it reacts the way you want it to, wait for it to go back up towards that initial entry and then buy, into that. So yeah, but Netflix looks bearish. We're getting a confirmation that this is bearish. I would look to scalp puts towards 366.82. And then again, you're just getting in, you're getting out very, very quickly. And I'm not holding these too long, man. Like I said, a couple minutes, 20 minutes, make my quick 10, 20, 30%. Wait for the next best trade, and that's it, man. That's all you need. Sizing can be like 5% of your account in the option, 10% of your account in the option. If you're beginners, I would not go above 10%. If you're more on mastery, I would just keep it around 10, 20% max, right? That's if you're doing closer expirations. If you're doing further expirations that are less volatile, you can go a little bit more, but I would never put more than like 20% of your account into an option contract. So that's my thoughts. That's my analysis. Hope you guys enjoyed this video and learned a lot. With that being said, if you do want to be a part of Trader Society, that's going to be the first link down below in the description. You can get started right now. You can trade with us. Fridays are known for being my best trading days. So if you do want to trade live with me every single day, get all my real-time trade alerts, not for you to blindly follow, but for you to see what it is that I'm doing in real time, using the strategies and, giving you the information of what it is that I'm doing and why I'm doing it in real time. You also get access to the Discord server, the chat room, the networking opportunities, the networking community we have within the chat room that can help you grow tremendously. You can direct message me one-on-one along with the members in the chat room one-on-one. The live streams, the video lesson library will teach you everything it is that I've learned throughout the stock market throughout the past decade. I started very, very early on when I was just 12 years old, and you will learn my entire legacy and everything it is about me with the stock market within the video lesson library, along with the Discord chat room and the live streams, the voice channel, stuff like that. If you want more information, it's the first link down below in the description. I'm looking forward to working with you guys. I will see you tomorrow. We're going to absolutely crush it tomorrow, as Fridays are known for being my best.